Hey guys, welcome to day 13 of the trading $1 million challenge. And so today we traded on Australian US dollar and we made only $2. Just $2. So it was a break even trade and nothing much happened. But there was a lot of intricate bits that I think you guys can learn from it. And so we're just gonna go straight into the video. So without further ado, let's jump straight into it. Okay, guys, the market is closed right now, but let's get straight into the daily review. So we're looking at Australian US dollar, and by the way, I made $2 off the trade yesterday, so like 2.13. So we're just gonna dive into why I only made 2.13 and why this was considered a break-even trade. So let's just plot a line first. Yep, around this line, and we're gonna jump straight into the 5-minute chart. Okay, so here is an interesting bit. You see, a few days ago, there was this really good volume accumulation level, followed by some strong US macro news. This pushed the price up. So this strong buying pressure and aggressive buying pressure followed with a volume consolidation behind it goes to show that buyers were accumulating the positions in this area. And as they were accumulating this position and finally prices skyrocketed up, it goes to show that there was a lot of buying orders that was placed at 0.68427. This was identified from our proprietary Ninja Trading platform strategy that we adopt every single day to find levels of strong buying and strong selling by banks and institutions who control up to 97% of the volume in the forex market. So once we see that and identify this critical level, we wait for prices to come back down. So as you can see, prices went up, bounced around, and then came back down. But instead of bouncing back up this time, prices just shot down. And there's a reason why that happened. And it's because during this time, there was, I think it was a very positive news on the Australian US dollar. And what happened was that it caused prices to go all the way down. So what does this mean? When you see a breakout like this and an original buying level, this goes to show that the sellers have taken charge of all the buying orders. All the buying orders were in. They were all the buying orders have been placed right at this level, but since the selling pressure is much higher, the number of sellers is greater than the number of buyers. So a lot of these buyers, they got stopped out, and their stop loss created further selling pressure, which pushes the price downwards. So at this moment, we consider taking a reversal trade, which means that since this price has broken down with large number of sellers, this line, instead of considered being a buying line, this would be considered as a selling line. So when prices went back up and touched this line, I got in right here for a sell order and wrote the price action down. Unfortunately, excuse me, I got out right at this level. The reason why I got it right at this level was because I was expecting prices to go down further. However, the trade that actually happened right here was around 4 a.m. 4 a.m. Asian time. So what happened was that in the next 2 to 3 hours would be the end of the trading day, and the next trading day would start after like 2 to 3 hours, right? And so that happened, and usually at the last 4 hours of the trading day, the volume would generally be very, very light, and there will be no strong directional movements. So prices came all the way down. I could have gotten out right here for a $70 win, but I believe that prices were going to keep going down, yet I forgot to take into consideration the market volume at that specific time. So prices went back up and I just got out barely break even. And you see it's actually a good one because prices later went back up and broke that original level. So this goes to show that this level itself is quite weak and the signal line is quite weak and it didn't deliver the performance, but at least we had good trading management in order to figure this out. So I want to share with you guys my trading docs. So ever since the first day, I've only taken around 7 trades right here, and here are my current statistics. 5 winning trades with 2 losing trades. This gives me a 71% winning ratio. We have a average reward to risk ratio of 3. So this means that for every $1 that I'm risking, I am going to make $3, and this is especially profitable. If I could keep up these statistics in the long run, this strategy would be extremely profitable, and I would be able to turn my dreams into reality much quicker than I expect. So this is pretty much it, and I hope that you guys have taken and have some insights from all the series of videos that I'm making, even though I'm quite sick right now, and I hope that you guys can appreciate the effort of me doing this. So this concludes the review of today. Please like, subscribe, and comment on my video. I really want to hear you guys out, and peace out, guys.